This past week, the Federal Reserve paused a hike of rates for the fourth consecutive time. Interest rates ticked down to their best levels in nearly a month, only to be crushed on Friday. Let's look at what happened and take a peek at what lies ahead in this week's Mortgage Market Update. Sustainably toward 2%. The Federal Reserve did not hike interest rates at their last policy meeting, which concluded this last Wednesday. In fact, they removed any reference to future hikes in their policy statement. So the good news is that the next move will indeed be a rate cut, yet nobody knows when that will come and can only guess at this time. Fed Chair Powell said he wants to have greater confidence that inflation is moving sustainably toward 2%. He repeated this phrase several times in his press conference. What was unclear to the markets is the measure that the Fed is looking at to make that determination.
A couple of weeks ago, the Fed's favorite gauge of inflation, the Core Personal Consumption Expenditure Index, or PCE, came in at 2.9%, the lowest level in years. Yet Powell made it clear he needs to see more data and confirmation that the inflation is still moving lower before the Fed considers a rate cut. March rate cut is now off the table. After the Fed's statement and press conference, the chance of a rate cut in March went from a probability of 60% to just 30%. Even Fed Chair Powell said a chance of a rate cut in March is not his base case. So now we must look to the May 1st meeting for a potential rate cut, unless, of course, surprising data comes in to support one sooner. Good news continues to be bad news in this market. Despite the Fed and higher rates, the economy is still ripping ahead. The U.S. labor market added 353,000 jobs last month, twice what was expected and the most in a year as economic growth remains strong. Wages jumped in the month and rose 4.5% from the prior year, and November and December figures were revised 126,000 higher. However, the drop in the average work week to 34.1 hours from 34.3 hours reflected weakness below the strong surface. After seeing a big drop in rates the previous 2 days on the heels of the FOMC meeting, this stronger than expected jobs news has whipsawed the market, bumping yields up in the largest single-day move since October 2022. The consumer remains confident. Despite the elevated rates and some of the bad news in the labor market, the consumer does remain confident. Consumer confidence came out last Tuesday and was reported to be the highest level in 3 years, highlighting that consumers still feel there may be better days ahead in the form of lower rates and lower inflation. 4% still holding the line. As I have mentioned before, 4% is a key level to track on the 10-year Treasury note. That's because if rates stay above the 4% level, then 4% is about as good as rates can get, and this means mortgage rates can't improve further. As of this recording Monday morning, the 10-year Treasury has bumped up 11 basis points to 4.144%. Home activity is responding. Every time we have seen a downtick in interest rates, we see a flurry of activity in the housing market. This time is no different, with the Fed's next move being a rate cut and spring quickly approaching. Things may end up being better than expected for housing. Just a few short months ago in October, rates were 8% and the housing market was frozen. That is not the case today. Bottom line, markets changed quickly back in October, and no one was expecting to see interest rates decline like they have in such a short period. We now know that the Fed's next move will be a rate cut, and it's coming sooner rather than later. With life wanting to move on and pent-up demand in housing, we should expect better days in the months ahead. Now, looking ahead, this week is all about debt. The economic calendar is light on reports, but the Treasury will sell $121 billion in 3, 10, and 30-year bonds. If the auctions go well, the rates could improve. If they don't, interest rates could spike higher. Through it all, we expect to see Fed officials offering up their thoughts on the economy and future rate cuts. Now, as we wrap things up here is a peek at current mortgage rates to start the week. Feel free to hit the pause button for details. And as always, thanks for hanging with me for this week's Mortgage Market Update. Be sure to like, comment, share, and I'm always here to help, and I look forward to funding your future. Have a great week.